Hello. In this presentation, I am going to review the application Project 2, showing you what it would be like for Steel Dynamics, a company that we've been looking at. So the first thing I'd advise you to do is review what the requirements are for Project 2. And what I'm going to do is I'm just going to walk through fairly quickly what I did, how I laid it out. This is meant to be a sample for you so that you can apply everything that we've been talking about to this company. After you're done with this project, you will have successfully understood the major components of managerial finance, corporate finance. We then are going to look as we move forward in the last week about fixed income and interest rates and the equity markets, which will be covered by your by the final quiz. So this sort of puts it all together. For those of you who are taking 315 in the spring, this is sort of our base where we're going to move from here forward into more accounting issues, more in-depth analysis, moving into forecasting and valuation. So let's get started. The first thing that you're supposed to be doing is you're supposed to be having an index. So what's covered here? Overview of the company, how do they make money? This is all from Project 1 is incorporated into Project 2 so that we tie the whole thing together. We got some summary income statements in common size and graph, income statement analysis. So if there were anything you wanted to correct from Project 1, you do it and bring it in. I have asked each of you a number of questions and I ask you to answer them. What I did here, you will see, is I asked myself questions and then I answered them. There's a piece on cash flow and working capital, capital and weighted average cost of capital, what the risks to the firm are, what the strategies are to the firm, and there is a bonus, credit ratings. So if you can figure that out, there's a bonus there. And then finally, there is a summary. So basically what this is for me is a checklist that did I cover everything that I asked you to cover. And I think I got it. So I'm not going to go through everything in detail, but this I basically brought forward from application Project 1. What do they do? What are their products? What are their customers? I also brought in how do they make money. Again, we're going to talk about this in 315, where we're actually going to go into recognition issues with revenue, which is quite a interesting topic today. We have our summary income statement, common size income statement, so that we can highlight, as you can see, there's some numbers here that sort of just stand out. I graphed it, gives us some information. I've done my ratios and I've seen things significantly improve. So the question basically I ask is why have sales increased? And it goes through and gives you an explanation. And I've included a chart so that you can see what is causing that. The next question was, why has the gross margin increased from around 10% to almost 17%? So I explain what that is, giving you a clear picture of what it is. Why are there impairment charges? Okay, I saw that on the income statement. So I went back and looked. This is right from the 10K investor presentation, and I made a couple of adjustments to that. Okay, these two are my thoughts. The others are from the 10K. Why did the tax rate decline? So we were at 40 and we went to 13.8. So what happened? So I talk about the tax cuts. Cash flow cycle, we're seeing it improve and get better. I showed it graphically because that's probably the most meaningful here. And then I made comments. Okay, it gives you some narrative, so you can read that. Free cash flow, I show you the computations. And then I have an explanation and discussion of them. My analysis of working capital, which is right out of Project 1. Capital and leverage, which is in Project 2. So I show the appropriate keys. So here we have the weighted average cost of capital. I made the assumption, like I asked you, of 15% on equity. That's an assumption. And then we actually see here that the return for future project, we need to have a rate of return in excess of 10.41 to be considered. It could also be used for an internal product profitability. So we're going to look at this and say, based on existing businesses, if we've deployed capital in those businesses, they need to reach this hurdle rate. So that's the discussion there. What are the risks? The risks are United States or foreign trade policy affects the amount of foreign steel. We've seen that, and that will impact sales. Price competition by overcapacity, which would push prices down, sales. Slower than anticipated economic growth, and a risk of a new recession, which is now being more talked about, would result in lower sales and a lower gross margin because they won't be using the entirety of the plant. Their strategy, acquire companies to diversify. Where did I get this? Right out of the 10K. And you can see, and also the investor presentation, and you can see all I did was take a copy and put it in. And this sort of gives us sort of the key things. So don't try to reinvent the wheel. Try to interpret, summarize, and prioritize. And it walks through all three. I then move it in. This is a bonus for anybody. If they have outstanding debt, see if you can find the credit ratings and put something in like this. That's a bonus. My summary basically is the company has seen sales and gross profit growth through increased demand, which resulted in better plant utilization. Its benefit from the economy underlying has been strong this year and last year. And then there were tariffs imposed on foreign steel. So this caused the price of foreign steel to go up, and the American steelmakers increased their prices too, so they're really benefiting this. Our costs within the company held flat. I think, from my opinion of looking at it, they'll enjoy sales solid growth of 10% in 2018. But I think as the economy slows in 2019, I think we're going to see flat sales. Flat sales growth and deteriorating margins as the utilization happens. So that's a brief overview. I encourage you that when you complete your project, is walk through this and say, did I cover it to this degree? The total project, application 1 and 2, is worth 47% of your grade. So when it's almost half your grade, make sure you give it the depth and attention that it deserves. If you have any questions, want me to review it before you submit it, please feel free to do that. And as always, please ask me any questions.